Hey everyone. Nice to see everyone again. Just we'll give it a second and let people come in. What's up, James? All right, we got some people coming in. Just if you guys can hear me, just say hi, say what's up in the chat. Hey, A-team, how's it going? We'll give it a couple minutes for people to come in. How's everyone's weekend going so far? Hey, Sarah. Hey, 8X, how's it going? Hey, Leo. It's good, Admar. Good evening. Good evening. Hope everyone's weekend's going well so far. It's been a bit rainy near where I've been at, so a bit gloomy all week, but yeah. Hello, Stan. Alrighty. It's good, Phil. Give it maybe like 1 or 2 more minutes and we'll get started. Alrighty. So let's make sure we got all this going. All right. So hot. Damn. I can't wait for that weather. It's still so gloomy and kind of chilly over here. But yeah. All right. I think we can get started. So good evening, everyone. Hope all your weekends are going well. Hope you had a good trading week last week. So if you're not familiar with who I am, I'm Senpai. Also named Ethan. I'm an analyst on Discord. You probably recognize me. Um, but yeah, so I'm primarily an options swing trader. And I've been around for a while, and I've seen it all. But yeah, so I've coached a lot of people, um, and one of the biggest topics that a lot of people struggle with is risk management and position management. Um, you know, if it sounds familiar, where you're blowing your account, or you don't know where to enter a position, you don't know where to exit position. Maybe if you only have one options contract, you're wondering how you properly size with that. This is the perfect class for you. We're going to be going over all of that. And hopefully by the end of it, you're going to have a better understanding. And you guys are going to be a little bit more disciplined. Because when we as traders, obviously our goal is to make money, right? Otherwise, why would we be doing this? So, in terms of trading, you know, execution, the actual execution of the trade is really, only 20 to 25% of trading itself, and the rest of it is prep work, getting that proper education, practice. All of these things factor into the overall result of how you're going to perform. So it's important to stimulate your brain for all of these different criterias, so we can become balanced traders, and not only focus on how many dollars I'm making today in the stock market. As great as that is, we want to make sure we're seasoned traders, and we get that proper background, so we can carry that over and find consistency in our trading. So, like I said in today's lesson, it's gonna be class number one. Probably gonna run right about an hour. I'm not exactly sure how long it's gonna take, but estimating about an hour, maybe 45 minutes. This class is going to be on risk management and position management. And this is including stop loss, entries, targets, the good stuff like that. So at any point, if you do have any questions, please do just leave a chat. I think in the live chat. So I'll see that, and feel free to stop me, and I can further explain or clarify something for you. But looks like we're having more people come in. All right, cool. What's up, everyone? Thanks for coming in tonight. But yeah, let's get started. So here, just on my screen, we're going to kind of just pull up. Let's do the most recent chart that I've done, MRVL. So MRVL here, this is one of the most recent charts that I've done. And this is, you can see we did take a position on the 6th, and that's going to be this candle right here. We did exit on the same day, and I can explain why. We're going to go through this whole chart. We're going to go through the reasoning behind it. You're going to kind of get that glimpse, and you're going to kind of see my point of view of why this was a trade that I wanted to take and how I managed this trade. Why did I get in? Why did I get out? Because afterwards, I can't foreshadow this, but we did get a good exit, and the stock went down the following 2 days. So how are we able to find this consistency, so that we're not holding for longer than we need to, but we're also holding long enough to where we're getting that we're getting exposure. Real quickly, looking at the chart, A team. This is going to be recorded, so this is recorded technically right now. So this will get posted onto the channel once we conclude. So you can just go back, listen in, and go to the parts that you want to listen over again. So yeah, it'll be on the YouTube. So starting off here, we are looking at the chart. So we did have, this is the daily chart on MRVL. This is something I alerted on the 6th. So, reasoning why we got into this position, we're looking at, after a big run up here, we're looking for this pullback into a Fibonacci zone. So this Fibonacci zone that I'm looking at for this pullback, we're looking at, bids in between the 0.5 and the 0.786 region, with this golden pocket at 0.618 and 0.65. So these are all just percentages. Just multiply this by 100, 50%, and then to 78.6%. So on this day, let's pretend that we don't know what happens afterwards. Over here, so on this day, we did have a really nice bounce off of this golden pocket region. At the time of that day, there was very good flow. There was a lot of options buying, unusual options activity on this day. So this is what triggered a entry position for me. I believe it was about $2.5 million went into the 68 call strike for next week. I believe it's 4/14 expiration. So out of the money, $2.5 million in premium going into this single options. That raises an alarm. So that is where we took an entry, and once we come up, these Fibonacci's are a really good way of setting stop losses and targets. So off of a bounce of this region, we know that this is a place that we are going to see buyers. So we can just right away pretty much mark this in. This is going to be something called a demand zone. Demand is essentially just an area where buyers are potentially going to step in and buy into the stock. And then the opposite of that would be supply zone, which is labeled up here, which is a similar zone, just the opposite, where there's people that are looking to sell in that region. So buy, sell essentially. So now that we have this marked down, we can see that this is that area where we can call support, and we can put our stop loss maybe right under. So I'm going to go over here and put in a long position. Click them over here. So, say we're entering right at this bottom, maybe our stop loss is going to be slightly below it. So let's just, kind of eye it, put it slightly below. Or sorry, this is the entry. So we enter here, and then our stop loss is, going to be slightly below. Let's give it, about $1. That's our red region. Now let's, zoom in a little bit and give us our green region. So this is going to establish our trade. So what this tool does for me is it allows you to kind of establish a very quick and easy visual of where you're entering your position, where you're going to plan your stop loss, and where you're going to plan your target. So, and with this calculates your risk reward ratio. So, with our entry being pretty much down here at this demand zone, we can place strategically our stop loss right under this level, because a break under this demand slash support zone, this is where a break below that's going to tell us that's going to invalidate our play, and we're going to be able to stop out of that very easily. So now this is where we get to establish where our target's going to be. So maybe we're looking, so that was this day. So maybe we're looking at that high of the day, right? That was where we also get this gap. So, placing this here strategically, we can see that, our risk reward ratio on this trade alone for this intraday trade was a 5.24 to 1. So what this means is we're risking $1 to make $5.24. These are the type of trades that we're going to be looking for, and what I personally look for, because putting yourself in a position of power like this gives you an advantage, because you get to control where you're entering a position and that risk that you take, because this is a fairly low risk trade because we're entering right into support. And there's really minimal downside to be seen, and we're not going to be right 100% of the time, which is why we need to manage our risk. So say this is one of those times that we do fail support, that's where we're protected by placing our stop strategically right below that support level, so that we don't get burned on the rest of the way down. It's important to establish this before you take a position and kind of acknowledge your plan before you take that position, so that you're able to visualize if this is a trade that's worth taking or not. Because say we instead now want to place our stop down at this next Fibonacci line. So now with the same target and entry, we've reduced our risk reward ratio by quite a bit. So now we're down to a 1.04. So what this means is, instead of risking $1 to make $5, we're risking $1 to make $1 essentially. So you can see how that shifts our position of power quite drastically. So a lot of people ask me where to place stop losses, where to enter. Is it too late to enter? Is it too early to enter? Stuff like that. So you can kind of visualize with this, analogy, how important that entry really is, and how important it is to, enter right at that perfect level where we're in a position of power. Because, if let's use that same stop loss. Right below support. So now let's say we alter our entry. So instead of entering near support, let's say we're going to be a bad trader and enter after the move happens, where we're kind of chasing now. So let's say we enter midway up, right? Now we're actually even in a worse position of power, where we're looking at a risk reward ratio of less than 1. These are trades that you never want to take. Personally, for me, my kind of rule personally is looking for at least a 1.5 ratio, and if better, a 2 to 3. These are the type of trades that I personally think are, the most beneficial, and these are going to be the most successful over the long run, because risk reward ratio is directly proportional to what your win rate needs to be. Because the higher risk reward ratio trade you're taking, so say like we're taking 2 or 3, your actual win rate can be lower. Most often when you're seeing someone playing a risk ratio of, let's say, like 3 or 4 or 5, most of these guys, their win rates aren't going to be, super, super high. You're not going to see these 98% win rate kind of traders. You're going to see more of, 70%, 65%, like sometimes for a really good trader, maybe low 80s. That's more realistic, because they're taking these trades in such a high position of power where they're okay to take a loss every 1 in like 5 trades, but when that one trade does hit, they're hitting big. So these are the type of trades that I look for personally, and I think it's very, very, very important to map this out, especially when I alert a trade just like this. This is the type of due diligence that I personally do, even maybe during my entry, or while I alert, just because I need to get these alerts out to you guys in a timely manner. But you guys as traders, and following me as an analyst, this is some tips that I can give you to kind of see the trade in my eyes, and you can kind of confirm that and validate, oh, I can see that this trade is like a 2.86 to 1. So this validates what type of trades I like to take, because maybe you like to take higher risk reward trades. Maybe you have a rule to take only 3 or higher, or maybe you're a little safer and you want to take 1.5. That's all up to you. But this is something that is very accessible. By the way, this is TradingView. It is free. So I do these charts, these daily, kind of like these swing charts, on TradingView. I personally like these better than Thinkorswim. Intraday, I'll use Thinkorswim, but for analyzing these longer term trends, I do like TradingView. So I highly, highly recommend. It's completely free. Um, so you can kind of follow along as well. So that's kind of the basis of the entry, stop loss, and targets. So if anyone has questions on this so far, or comments, concerns, you're always welcome to just ask, and I'll get to you. But with that being said, now we can kind of determine, now that we have our entry and stop loss levels, targets, there's multiple ways to establish a target. One of them here just being, adjusting this in relativity to that risk reward ratio that you personally like. So, if you're looking for a 2 to 1, you don't have to even hit high of day. You can, hit this 67 level from the bottom, and that is, a trade that satisfies your conditions. And if you hit that high, that brings you even higher. So that is one of the main reasons why that I personally got out of this trade. So I know that I said that we're gonna hit 50% profit on this trade. Little ballsy of me, right? But I did see a very strong bounce region, and there was a lot of bullish volume coming in on that day, and this bounce was very strong. So adjusting this risk reward kind of template, I could see that my risk reward was going to be at least 2 to 1, if not higher. So this is it was intended to be a swing trade, but we got a very strong bounce, and we did hit 50% profit on that day. So 50% in, like, I think it was like an hour or two, is really good. So another thing that I want to go over next, is after that, how long should we be holding, right? So for me, my kind of rule is, so I am by nature a swing trader, but if we see some sort of impulsive move like this, and it does happen sometimes, like in this case, you're just going to see that you were very, very right, and the move actually isn't going to take longer than you expected. Don't hold just because your initial plan was to swing. If you're hitting these targets that same day, don't be afraid to trim your profits. So this is going to lead into the next discussion of position management. So, now that we've entered our position and now that we've established, you know, our entry, our stop loss, and our potential targets, now we want to talk about how we're going to, manage that actual position. So, in terms of stop losses, let's start there first. So there's two different ways to kind of do a stop loss. One I think is better than the other, and I can kind of explain why, and I can explain what I do personally. So the first way that we can do a stop loss is through a percentage of the options contract. So, say the contract is worth 1.0, just for example's sake. So, this is actually worth $100 per contract. So, 1.0, let's say our personal rule is, 25% stop loss. So, we're going to set that, limit sell order for 25% of that 1.0. So we're going to set it, at 0.75. So, once that 0.75 hits on that options contract, our limit sell will automatically sell for us and we're stopped out. So that's the first way. This is the most common way I see people do. And personally, this is something that I don't like. And I'm going to explain why. So the second way, and is the way that I do, is using actual price levels. So, a lot of people don't, look at a chart and they kind of just go in blindly. And this is, this is where my method here encourages you to look at the chart, establish these trends, establish where you want to exit on the chart and where that support is. So, now that we, charted this out, we can see that this low here, let's just call it 65, is, a very strong level. We saw buyers step in very strong, and we got a very, very good upward reaction. So 65 is a very nice level to use in this case. So personally for me, what I'm going to do is I'm going to set an alert. So, whatever alert system you personally use, that's okay. But, Thinkorswim is good for this. TradingView is good for this. So, for me, I'll set a price alert right at the support, and I'll wait for that to trigger. So for me, I want to get notified when we hit the 65 level, and maybe I'll put another alert, right below that support. So, if we knife down pretty hard, I'll get alerted right away. So now that we have these established, we are protected because we will get alerted, whether it's through, a text or however you set it up. You're going to get a ping when this support breaks. And when this does, this is where you will personally, just manage your actual options position and stop out of it manually. So this is the way that I do, and it does require a little bit more micromanagement, and for you to actually, kind of be ready to exit that position. You can't just walk away. You have to be ready for that alert itself. So that's kind of, I guess, the one downside. But the main reason why that I do this is because not every stock moves the same. Stocks have different betas. They have different deltas. They're all different. So, I think we can all agree that a stock like Tesla acts very differently from a dividend stock, say like T-Mobile. The two stocks trade completely differently. So if we're using a 25% stop loss or whatever percent stop loss that's fixed, I don't think that's a good strategy to use when trading different types of stocks, because Tesla is a high beta stock, so and a high gamma, so it's going to move quite a bit. So if we're not giving it enough room sometimes, you've probably experienced so many times where, you get taken out on a stop loss on a more volatile stock and it just shoots right back up into the green. This is why. So personally, I think that setting a price standard on the chart itself is much more reliable and it'll give you more consistent results. Another thing to note is with this volatility and you giving this stop loss a little bit more room, you are going to see your options price move a little bit more. So we're giving it more room. So we're going to see this percentage, maybe you're going to be down, say like 30% at one point, just because of premiums. So maybe that day, premiums just got killed. But it's still holding those key support areas that we've charted. And as long as we're within a relatively reasonable strike price, and we have enough time on our contracts, it'll be okay. So that's where you see sometimes, my plays, they will move quite a bit. Sometimes we will be down a good amount and it'll bounce right back. So that's why I don't, I don't update them too often where, if it's within my rules and within my chart, essentially my analysis, then I'm going to let it keep going because, it's a swing for a reason. So I know a lot of people can't do that mentally and within good reason. Like that's it's pretty obvious. It's hard to see your positions down. So it takes discipline, it takes practice, and it also takes trust in yourself. So this is where maybe if you want to test this price, this stop loss price kind of method out, maybe you just do it like visually on the first time, and just kind of make pretend, or do it on a paper trade. Kind of develop that confidence in yourself. So because we're never going to be perfect. I'm not perfect. We're going to take losses, but this is where it's very key for you to be able to be the bigger trader, and admit that you're wrong. So if we're doing this price stop loss, and say we do break below our key level that we established before we even took the trade, if we're not you know obeying this and we just keep holding and just kind of quote unquote praying that it keeps going up and recovers, this is where people blow their accounts. So this is case number one where people will blow their accounts. They don't they kind of get too ambitious and they don't manage their position properly. So it takes practice. It takes a lot of it takes a lot of management essentially for you to be able to do this. But I think in the long run it is worth it, and you're going to see more consistent results the more you do it. And this is the method that I personally use. So which is why you can see in my trades, sometimes I do take losses, but when I do win, they're pretty big winners. And it's for a reason. It's for the reasons that I've kind of been going over with my ways of doing stop loss. I'm giving it some room, and I'm taking these high risk reward trades. So yeah, does anyone have questions on anything I've talked about so far on the chart? Feel free to leave that below. Otherwise, I will kind of continue. Okay, looks good. So next thing that I want to go over, now that we've talked about stop loss, now we have to talk about the other side of the trade. So now we have to talk about exit. So, say our stop loss does hold and we are seeing the move that we want to see, that we're anticipating to see. So in this case, it's going to be a move up. In this case, it did work out. So, we're moving up. Now, this is where we want to establish that, risk reward again. So say let's use this example of 2. So we're going to use a 2-to-1 risk reward. We're risking $1 to make $2, which is, it's pretty fair. It's good. So now that we've entered down here, we need to establish our exit points. So I am going to just put in some horizontal lines. So this here is our line for 2 to 1. Maybe we'll put one up here and then one up here at the gap. So now that we've established, our target 1, target 2, target 3, how are we going to manage this? There's a few different ways we're going to do this. So first of all, 1, there's the way of just, getting out completely on the first target. We've hit 2-to-1 here at, 67.1 roughly. And, we've hit our target. We've realized a 2-to-1 gain. We're out. That is okay. That's, this all comes down to personal preference at the end of the day and what you personally are looking to do with your account. And, so there's nothing wrong with that. So that's kind of the first way you could do it. Another way you can do it is, now that we have targets 1, 2, and 3, we're going to do something called scaling out of position. So this is something that I recommend doing because, a lot of times, a lot of people will tell me, oh, I sold my position and, it just kept running. And, I missed out on X dollar amount. And, that sucks, right? So a lot of the times, especially when you're swing trading, and I mean, this applies to day trading too, but for me in swing trading, you'll see this a lot where most of the money you make overall in your trades is actually going to be on those runners that you take and you leave on your trade. So what you want to do to take advantage of this is scale out of your position. So here we're going to see that, our target 1 is at this 2-to-1. So maybe our target 2 is here at this high of day for this 0.5. Kind of retrace Fibonacci. So let's use this here. And, this would be our second target. And then our third target is going to be the top of the gap. So this would fill the gap, which we haven't yet. So, 1, 2, 3. So maybe at target, so let's say we have 4 contracts, for example, just because it makes, or actually let's use 3, just because we have 3 targets, it's easier. So, 3 contracts. At the first target, we're going to scale out 1/3 of our position. So we're going to get out, sell 1 contract here. And then what we do after this first contract, it's very important after your first scale, no matter what, you're going to raise your stop loss. So now we've done this, we're raising our stop loss. Let's put it up to here. So we're putting it up to our entry essentially. So what we essentially do here, after our first trim, and we raise our stop loss, raise it to your break-even point, so your entry, or even a little bit above. It depends on how much you want to risk after your first trim. That's completely up to you. But essentially what you do here is you create, after your first trim, a risk-free trade. So what I mean by that is, after your first trim, you raise your stop loss to break even or above. You cannot lose on that trade anymore. You are guaranteed to make money no matter what happens on that trade. So, again, even after our first trim, and we raise our stop loss to break even or above, even if we don't hit the second target, and we actually hit that stop loss first, we still come out with profit. And this is the most important concept that, one of the most ones that we're going to talk about today, because, this small adjustment that we can do, it limits risk so much, and you're going to see your win rates and your consistency skyrocket. You're going to see your results so much better just because of this one small, management that we're doing on our position. A lot of people won't raise their stop losses and they will just, keep it way down here because, and I'm sure people have experienced this, I've experienced it in the past. The worst feeling in the world is having a big green trade go red because, you get very emotional. Say the trade was up 50% and we go down, we don't manage our position correctly, and suddenly we're down 20%. Mentally, we're not going to want to sell that position because we know that this was at 50%. So you're going to be feeling entitled to another 50%. That's where we want to, mitigate that. Let's see. Looking at the chart, the chat real quick. RE, y'all already exited the play. Yes, we did. Phil, sometimes it's hard to trim and have several contracts when they're highly expensive. Yep. So in terms of that is okay. So this is where the actual price of the contracts, it does matter here. So if these are very expensive contracts for you, it might be worth, sitting out of this play because, you're not going to be able to properly manage that contract and, manage the risk of that contract properly. because if we're forcing a play and we start breaking these fundamental rules, this is where room for error gets introduced into our trading, and we're not going to see that consistent result anymore, because we're adding so much variability to our trade. What we want to do when we trade, it should be very boring. We should make it almost as a system. It should be very systematic, and it should be boring, essentially. If it's boring, you know you're doing it right. Ari, you can message me on Discord after, and I'll get back to you on that. We can figure out a game plan for that. But yes, we did exit this play already. We exited on the same day at 50%. So for this reason here, I did say that once we hit 50%, we trim and we raise our stop loss essentially. Just for this reason, because once we do this, we essentially give ourselves, you can see the numbers. It turns into a 14-to-1 risk reward. So yeah, we're not really risking anything anymore. But once we have this, let's say we don't hit that stop loss even after raising. Now we're looking at target 2. So that's going to be up here at this next 50% retracement Fibonacci. That's going to be right around 67.78. Once we hit here, we're going to, there's two options. We either trim another third of our position, so that'd be 2/3 now, or we just get out completely. We call it a day. This is a great trade already. This would have, been that 50% play. We're out of that trade. Or what we do, and what I did here in this case, is trim. So we're left with a small amount of our position left up here, and what do we do again? We raise our stop loss. So it's going to be a little different here, but you kind of get my point. We raise our stop loss. So what are we going to do here? We can raise it. Typically what I like to do here is I like to raise this stop loss up to that first target. Now that we're up here in this kind of euphoria region, where we've seen a significant move since our entry point, we want to see continuation here. This is where some breakouts are going to be very, very strong, and some breakouts are going to be weak. They're going to pull back. They're going to essentially kill time. We're going to see a burn of theta on our contracts, and that's what we don't want to see. So once we've already trimmed twice, we want to see that continuation higher. And to limit our risk here, what we do is we raise that stop loss one more time to this first target, or the target below essentially. Sometimes the target will be a little wider like this. Sometimes it'll be really tight. But regardless, you can kind of manage that yourself with where you see fit and where you're comfortable with. But that's kind of where we're going to look for, and that's kind of the ideal place to place your new stop loss. So kind of just summarizing here, we are scaling out of our position as we see price move in our favor. And as that's happening, we're also raising our stop loss above that break even point to create a risk-free trade. Because once we do create a risk-free trade, there's a lot less emotion that is going to be involved, right? I think everyone can agree that if we're not risking any losses on the table, we're not going to really care what happens. We're going to let it run out, and do its thing. So we're not going to really care about these micro moves that happen once our position is risk free. So that gives us room for potentially hitting these higher targets. And once we move higher, we get to reap those benefits. Let's see, Mahu. So buying 3, then selling one at a time will be only one trade, right? Right. So in terms of PDT, let's say your first for your entry, you're buying, you bought 3 contracts here. For your selling, you sell one here, sell one here, sell one here. In terms of PDT, that counts as one trade. So you're okay there. Say in this case though, let's say you bought 3, you sold 3, or let's say you sold 2, and then you want to get back in. So maybe it comes down and you buy 1. So now that we've done that, we started with 3, then we trimmed 2, so we trimmed 1, so we have 2, and then we come down here and we buy another one. So now we're back at 3. If we sell again, that's going to count as 2 trades. Green Lotus. Do we scale or trim manually? Personally, yes, I trim personally manually. So what I do, just like with the with the stop loss, I will also, so let's use the example. I will put, an alert here, alert here, alert here. So now I'm gonna have a bunch of alerts on my chart. So say, this is a position that's, active. I have my stop loss alerts down here. I have my first trim, second trim, third trim. These are all on alerts. So, because like me personally, I work a full-time job, like most people, which is why I do, swing trade primarily. And I see a lot of people, appeal to that because they can, relate. So I don't have, the ability to stare at my chart all day. So that's why I think it's very, very, very important to have these, these alerts on so that you don't miss, you don't potentially miss an exit, whether it is an actual trim or the stop loss itself. So, once these get triggered, then we come back to the chart, come back to our, position, and we manage it properly. Does that kind of make sense? I hope that all makes sense for you guys. But yeah, so that is that's pretty important in terms of, risk management and position management, for everything we talked about so far. So, we want to make sure we're establishing this trade. So you can kind of see this is, quote unquote, a lot of work, I guess. But now that we've, done this work, there's much less stress in the trade. We have a plan for our trade, and this is going to reduce the amount of times, you're going to ask me, where are we, looking to take profits? How much are you still holding? Where are we stopping out? Stuff like that, or like, is it too late to enter, right? Because the analogy here with, entering as close as you can to your stop loss, is important because, as you get close to the stop loss, you're putting yourself into such a power position, especially on like a swing trade, because this can work on, a larger scale with more candles. But I'm just using this one example here. So, the closer you are to your stop loss, you can see, like here, your risk reward ratio gets greater, like exponentially. And it sets you up for such a great trade. And these are the type of trades that we want to look for. And, as we move up, if you're going to be a chaser, you can see, your risk reward also diminishes at a pretty fast rate. So, before you consider taking a late entry next time, or because people miss entries. It happens. Nobody's perfect. Nobody's going to catch everything. The second people send it out as an analyst, it happens, and it's totally reasonable. So the next time you're in that position, ask yourself, is that risk reward ratio still worth entering here? And it's a pretty easy yes or no visual. So if it's a yes, say we're down here, and maybe we're up here, and this still presents a decent risk reward. Maybe yeah, you can take an entry here. Just know that you're risking a little bit more than I would be. But if we're up here and you can see visually, oh hell no, like this is a terrible trade now, then you can say, okay, I'm either going to wait for a pullback where it's, the risk reward is back into my favor, or you're just going to wait for the next trade. Because, I personally don't expect people to take every one of my trades. That's not an expectation that I have. So, I know people are going to miss some trades, and that's okay. And I know sometimes I put out more expensive trades, I put cheaper trades, and that's on purpose, by the way. I want to accommodate everybody. because I know some people have, $20,000 accounts, and some people are working with smaller amounts at, maybe $1,000. So, that's totally okay. Everyone is on their own path, and they're on their own journey. So that's okay. So, you know, evaluate the trade, see if it's worth taking for your account and in your place. And, if you can say yes to it, then, go for it. Otherwise, just wait for the next trade. And then lastly, one thing that I want to note as well is, say we are on that small account, because this next issue that I'm going to present is more relative and kind of relatable to a smaller account. So, say we're at a $1,000 account, something small, and we can only afford, one or two contracts, or let's say one contract, before, over risking ourselves. So, at this point, we're taking one contract before, so, how do we scale out of this, right? So my personal rule for building a small account, because I can tell you it's not easy. Um, like for obvious reason, right? You're starting with such a small capital and you're trying to grow it to a large enough capital where you can take kind of like quote unquote normal trades. Because with a small account you do have to risk a little bit more to get that started. You can't go with like the traditional 3 to 5% per trade. It's very hard essentially. But with that being said, with one contract, I know this is going to kind of be relatable to a lot of people here. So with a small account, your goal is not to make money. Your goal is to stay alive, preserve capital. That's what your goal is. Because a lot of people have that reversed. They just want to, take a $500 account and 3x it within like two trades. With that is possible with some luck, obviously. But that's not your goal. Your goal should be to preserve capital, because you can't trade you can't trade the market without capital. So, with that $500, $1,000, you're looking to take these highly favorable setups and manage your trade and get the heck out when you see profit. So, with a small account, maybe setting like a 25% 25% profit kind of goal, that's great already. And even if you do go for that first target, great. This is where I recommend getting out. You're not going to have that ability to scale. This is for more for people that are able to take multiple contracts, but don't feel bad about that. It's okay. Everybody is on their own path. Don't compare yourself to others, and don't compare yourself to me, because at the end of the day, it's your money, not mine, right? It's your money, not others. So if you're not managing your own money properly, you're the one that's going to be punished for that. So make sure that you're managing your own trades properly. And if you are in the boat of you need to preserve that capital and you need to grow a little bit slower, yes, it's going to take more time, but you're going to see consistency. And if you can't manage like a small account like that and preserve your capital and see consistency, that bad habit is going to get translated to a larger account. So, when you finally do get your hands on, say, like a $20,000 account, you're not going to have the proper risk management that you need to, properly grow that account. You're going to see, pretty big fails on that account. Being honest, you're going to lose a considerable amount. And with a larger account, that obviously impacts you more financially. So you'd rather lose on the small account than the large account. But with that being said, make sure you're playing the small account, you know, responsibly, essentially. So make sure you preserve your capital, get out of trades quicker, and you're not going to, you know, you're not going to be able to experience those runners when there are runners, and that happens. It's okay. Don't think about the what ifs. Think about what really happened in reality, right? So, you know, because yeah, it can keep running, and it can hit targets 2, 3, 4, 5. But what if it doesn't, right? What if you hold in for that you didn't properly trim at, the first target, where, everyone else that's holding, they've already trimmed that first target and they're holding for second, third target, and they've raised their stop losses, right? So say, you're that small account and you didn't trim at for targets 1 because, you're being a little greedy and you want to hit target 2, 3, 4. Let's say that it doesn't hit that, and, we get a very quick drop. You're going to be in the red, and being in the red like that on a small trade or a small account, that really, really hurts, and that affects you because, your goal, like I said, is to preserve that capital and grow at a slow rate, essentially. So, you want to build that consistency, and with that consistency, then you will see your, account reflected of that, and you'll start to grow as well. So yeah, main thing here, focus on consistency, focus on managing that position correctly. Don't focus on the dollar amount, because once you start, focusing, oh, I have to make, I need to make a 25% increase on my small account on this trade. Once you start thinking like that, that's where you start failing. And that's where, emotions start taking place, and, you're going to not see the results you want to see, essentially. So I hope that all made sense. That's kind of what I wanted to talk about, especially with, position management and risk management. It's very, very, very important. And, these are kind of the, golden rules for me and how I personally like to trade, because, if you don't have these, fundamentals, and you don't have this set in stone, it's going to be very hard to grow your account in a responsible manner, and, you're not going to see the results you want to see. So, this is how I personally trade. These are, the fundamentals that I personally use, and I hope that, with this lesson, I was able to, translate that to you, and hopefully you get to take away something. Even if it's a small little thing, that's all that matters to me. So I hope that, you guys can learn from this. And, if you do have any questions, you know where to find me. I am going to be, all over the place. I'm on YouTube here, so you can leave a comment here. You can also message me on Discord. So I just left my Discord. So this is the Discord that I personally run. So you can, check that out. I left that in the comment there. And there's also a link in the description as well. It says join our Discord. So make sure to leave a like, comment, subscribe. So you don't miss the next class. I am going to be doing these, some here and there. So this is only class number 1. So, there's definitely more to come. Leave a comment as well on, what you guys want to see for topics for these classes, and, I'll take that in consideration, and, we can do a class on that. So definitely leave these comments, leave a like, subscribe, and, join my Discord. There's a free trial there. And I'm sure you guys have heard about the copy trade that I'm working on. It's a work in progress. I sent out the first email yesterday. So if you didn't get it, message me on Discord, and I'll try to figure that out. But you should have gotten it if you're subscribed to the wait list. Some people had issues, and they got the email in their spam or like promotion tabs or something. So just check all your tabs before you message me. I know it's kind of weird, but yeah, more information there to come. But yeah, definitely, I hope to see you guys in my Discord. I hope to see you guys, in the group, and, take advantage of that free trial. Because, all I want to do is give you value, and make you guys successful independent traders. So, if you guys have, like I said, if you guys have ideas for the next classes, leave that as a comment below. Don't leave it in the live chat, because I won't be able to see it after. So leave it as a comment on the video. It's going to get uploaded, so on the YouTube, so you'll be able to, go back and listen to it. But yeah, I hope you guys all have a good rest of your night. Just a reminder, tomorrow I am going to be going live again. Tomorrow Sunday. It's gonna be like Sunday evening sometime. I'll post the time that I go live, but we're going to go over TA, chart analysis, and just like a watch list essentially for the rest of the week. So, we're gonna be prepared tomorrow, and we're gonna kill it. So yeah, leave a like. Have a good rest of your night, guys, and I will talk to you guys soon. Thanks for tuning in, and yeah, I'll talk to you guys later. Bye.